Benjamin Cowan is a cryptocurrency analyst and founder of the analytics platform Into the Cryptoverse, known for using data-driven models to analyze long-term crypto market trends. Bar chart rocket.
Yeah, I mean, we are in a late business cycle environment as far as I'm concerned, and there's only one way out of it, and it's the it's the word no one wants to talk about, right? It's the recession word. Um, I this is the issue that markets have, and if you look at here's a chart that kind of shows you the business cycles. So there's two ways you can look at this. This chart is created by taking the S&P 500, dividing it by the unemployment rate squared, multiplying it by inflation rate year over year, multiplying it by interest rates, and then normalizing by the money supply. And when you look at this chart, it really does show you each business cycle very vividly through the
Hmm.
decades. And you can see that we've been in a late business cycle environment here for a while. The problem is the only way this chart historically returns back down to the lows is through a contraction, right? Through a contraction in the United States. And so in the short term, how you deal with it is you say, well, yeah, I don't know if you're going to get one right.
Benjamin Cowan explains that the economy appears to be in a late-stage business cycle, and historically the only real way such cycles reset is through a recession. He describes a model that combines the S&P 500 with macroeconomic variables such as unemployment, inflation, interest rates, and money supply to visualize business cycles across decades. According to Cowan, this indicator shows that the current environment resembles past late cycle periods, which typically return to lower levels only after an economic contraction in the United States, although the exact timing of recession in the short term remains uncertain. The main point highlighted by Benjamin Cowan is that the economy appears to be in a late-stage business cycle, and historically these cycles only reset through recession or economic contraction. He emphasizes that based on macro indicators, such as the S&P 500, unemployment, inflation, interest rates, and money supply, the current environment resembles previous late-cycle periods that eventually ended with recession, though the exact timing is uncertain. Char decreasing.
Way, what I could see happening in the short term is I could see things getting a little scary, but maybe we get a new Fed chair come in. Perhaps they're a little bit more dovish. Perhaps they turn the money printers back on. Maybe they use war to justify it. That might delay things. That could kick the can down the road another year. But ultimately, the way that the economy sort of corrects itself and we go back to normal times where inflation and the unemployment rate rising are not just the only issues, is through a contraction. And we're not there yet, right? Layoffs remain really, really low. We haven't really seen layoffs pick up that much, even compared to pre-COVID times. So I don't really, at this point, we have not entered into that negative feedback loop. And the negative feedback loop is characterized by companies laying workers off. Those workers then lead to less demand in the overall economy, which then leads to those companies selling less products, which then leads to lower stock prices, which then leads to more layoffs. So we're not in that negative feedback loop right now, right? And we haven't been in that negative feedback loop. But anytime the stock market starts to go down, we run the risk of entering into that negative feedback loop. And the problem for the Fed in the short term is exactly what you said, right? It's the fact that oil is starting to really go up. And the problem is when you look at the prior business cycles of the past, what caused them to end historically was a rapid rise in the price of oil. So now you're looking at the business cycle in the late 80s, early 90s, and this blue line is the price of oil. So you can see that it was when the price of oil started to go up, that's what led into the end of that business cycle. And a lot of times you'll see that play out where it's sort of oil rising in a late business cycle environment that then ultimately leads to checkmate. But again, it's a long process, right? It can take months to play out. You should not expect it to play out overnight, but it is a process, I think, that will play out.
Yeah. So not only do you have that, existing catalyst right now, the current catalyst, which is oil prices rising, to your point, you have the the jobs reports coming down, and then you add in the tech side of things, which is AI, which is then also a lot of people are expecting a lot of jobs to be sort of lost because of that. And so now you're sort of bringing in multiple factors that are all sort of converging around this like core thesis that you have.
Right. And I think it'll probably take, it'll probably take another couple of years for the whole cycle to ultimately play out, if that makes like I don't think it's all going to be over within like the next 5 months or anything like that. I think it could take a while because the processes take a while to play out. If you look at the last several contractions, I mean, once it was underway, it would still take like a year for it to ultimately play out. And you could argue that we haven't even necessarily entered the contraction even as of March of 2026.
How do you think about these cycles? I saw a post from you on X, a tweet, a post on X from 2020, where you had outlined what you thought would happen with Bitcoin through 2042. So, I mean, that was a long time out. You're talking 22 years, right? You're sort of thinking about that.
Right.
So obviously you're thinking about some sort of cycles in order to sort of predict the 22-year movement of that. So how do you think about those cycles? Like, what's really driving that? A lot of people thought it was a Bitcoin 4-year halving cycle. A lot of people say global liquidity cycle. Some people say the business IM cycle. Maybe it's ISM. Maybe it's all of those things. But how are you thinking about those cycles to drive that 22-year narrative or vision that you had? All right, stop what you're doing right now and book your travel to come join me in Las Vegas for the Bitcoin conference. It's the biggest event of the year, the one I look forward to the most every single year. Literally my entire year calendar is set around it. It's the biggest event, the most culturally relevant event happening in the world. The top politicians, the top bankers, the top investors, the top entertainers, everybody's gonna be there. So come check it out, April 27th through the 29th. Use my code MarkMoss to save 10%. And if you use my code to save 10%, send me a message on social media or email, and I'll invite you to a private party I'm having at the event, and I'll see you there.
Yeah, I think Bitcoin roughly operates on 4-year cycles, but I don't think it's based around the halving. I think the halving does have some impact. I'm not saying that it has absolutely zero impact, but Bitcoin does not have a monopoly on the 4-year cycle either. If you look at the S&P 500 and go look at the 50s, 60s, 70s, and 80s, you'll see we had lows approximately every 4 years, right? You had one in 1982 and in 1978, 1974, 1970, 1966, 62, and the list goes on, right? You just go back approximately every 4 years and you can find lows in the market. So a lot of people are under the assumption that Bitcoin operates around a 4-year cycle because of the halving, but it's probably a lot more complicated than that. It probably is a combination of the halving, but also a combination of other things that you mentioned, like liquidity, um, like the presidential election cycle perhaps has some influence on the market as well. But I think regardless of what it is, I think if you just look at Bitcoin's price history, you can see that it has a low approximately every 4 years. Now, I don't expect that to hold forever, right? Like, I don't think that we're going to be able to look back at this in 100 years and find that every 4 years Bitcoin had a major low. I think there will be something at some point that kind of takes it off of that, where something else happens. But I don't think we've entered into that. And I think it's better for people to not fade the 4-year cycle than to constantly try and fade it. Because you have to ask yourself, is it worth fading it every single cycle just on the off chance that you happen to be right? When history shows us that it's much more likely to keep occurring than to take a detour. Even though at some point we likely will take a detour, it's better to just kind of assume the status quo remains unchanged until proven otherwise, which means that the next low for Bitcoin should occur in 2026. I just think it's too early for that to occur right now, right? I think February is far too early for Bitcoin to find a low. And what's interesting is if you look at the prior midterm years, basically every midterm year we had a major low in the month of February, but it never ended up being the low, right? So I think that it's premature to call for an end to the bear market as of February 2026. Depending on what happens going into April and May, which is kind of that next window of weakness, you could have a low as early as May. But my guess, the most likely outcome is that Bitcoin's low would probably be sometime in the 4th quarter of the year. My guess would be maybe in say October.
And that's just based off of cycles alone, because obviously there's a lot of fundamental things that could change that.
Right. I mean, I think if Bitcoin were to drop, like if Bitcoin dropped 50% in like the next couple of months or something, then I don't think I would wait until October to call the bottom. But if you look at, like, for instance, if you look at the year-to-date ROI of Bitcoin and compare it to the average of prior midterm years, and if you want to overlay one standard deviation to that average, you can see that Bitcoin is basically just following the average of prior midterm years, right? Like it pops up early in the year and then it sells off into February and then it goes sideways for a while, gets a little bit of a renewed interest in early March. They get sold off again. And then on average, Bitcoin just goes sideways for most of the rest of March. And then it drops into the April and May timeframe. So for me, this is playing out how it always has, right? Where you get that, you top in the fourth quarter, you sell off, and you get a normal midterm year bear market. What really tripped people up this cycle was that this is the first cycle, arguably, that Bitcoin topped on apathy rather than euphoria. So if you look at the social interest of crypto, this orange line, it's basically just been trending down since May of 2021. So if you color code Bitcoin's price by social interest, you can see that we topped on apathy, kind of like we topped in 2019 on apathy. And they have a lot in common because in 2019, Bitcoin topped in June, 2 months before quantitative tightening ended in August. And this time, Bitcoin topped in October, which was 2 months before quantitative tightening ended in December. So I think from a macro perspective, the current drop more so resembles the 2019 top. Also, it's important to note that in the 2019 top, there also was no rotation from lower risk assets to higher risk assets, right? So after Bitcoin topped back in 2019, there was no rotation into altcoins, just like in 2025, there was no rotation into altcoins. And earlier this year, when gold got a correction, there was a lot of people that thought, oh, well, maybe that'll rotate into crypto. But in a late business cycle environment, we don't really rotate from lower risk to higher risk. What you see throughout a late business cycle environment is that high risk assets rotate to low risk assets.
Now, you mentioned the 2019, and that's like the mid-cycle high. That's not the high of the cycle because that's not on the 4-year cycle. So you're
Right.
saying right now what we just saw is more like to 2019, but the 2019 was a mid-cycle high versus now would be end of cycle high.
Right, exactly. I think that, I think that sort of the downturn that happened after the 2019 top is similar to the downturn that started in October of 2025 and that will last for a majority of 2026.
Right.
And you can even see that this last bull market by Bitcoin was mostly just a Bitcoin-driven bull market. This chart is the advanced decline index of the top 100 cryptocurrencies. And so when people think of like a crypto bull market, a lot of people think about what happened in 2020 and 2021. And back then, you could basically buy anything and it was going to go up in value, right? You can see this line was generally going up in 2020 and 2021. There was just so much money floating around. Everyone was, making money on a lot of random altcoins. And so I think a lot of people thought that the next bull market had to be similar to the one in 2020 and 2021. But in fact, the next bull market was more so similar to the one we had in 2019, where the advanced decline index, just also continued to drop. So basically, we had a bull market that was led by very narrow leadership. And then once that narrow leadership entered into a bear market, it then exposed the underlying weakness that already existed in the altcoin market. It's just people didn't know necessarily it existed in the altcoin market because Bitcoin was sort of keeping these other things afloat. But the reality is when you look at the valuation of altcoins against Bitcoin, this chart right here, you can see that altcoins have been devalued against Bitcoin since January of 2022, right? Like they just continue to drop, and there hasn't really been a rotation back out of Bitcoin into alts.
Yeah. If we go back to the chart that you were showing earlier, how the 2019 was similar, the top of 2019 was similar to the top that we've had recently. And I think about that chart specifically. I mean, I'll admit, I mean, I obviously publicly said I did sort of start buying into maybe the 4-year cycle was sort of dead, partly because of obviously, as the law of diminishing returns, right? Each halving cycle, the amount of supply restriction is diminished, so it like has less and less to do with it. Also, it's like
Right.
in 2021 at the peak, it was when Jerome Powell came out and announced that they were going to start raising rates in the fastest rate in history, and now we're lowering rates. So it seems like, well, we're not raising rates, we're lowering rates. And, the
Right.
supply isn't really going to matter that much. Maybe it is dead, but then sure enough, right on cue, approximately 18 months after the halving, it sold off, right, in October instead of November. So,
Right.
I agreed with you, and I also said until proven otherwise, it's sort of in effect. But it looks like here we are. A lot of people maybe still don't even want to admit that. I still see a lot of articles coming out from pretty smart people saying that, the 4-year cycle is dead, even though it shows it sold off. I mean, how would you answer that?
Yeah, I mean, I think people always want this time to be different, but when you look at the number of days that the last cycle ended up being from the low, it ended up being 1,062 days. Okay. The cycle before that one was 1,059 days, and the cycle before that one was 1,068 days. So Bitcoin literally topped within a week of where it topped in the 2 cycles that came before it. So when you look at a chart like this and you then extend it to the next low, I have to look at this objectively and just say, well, the next low is probably going to be somewhere over here, right? Not now, but several months from now. Um, the people that the people that are saying that it's different this time, look, anyone could be right. Like, no one fully knows what's going to happen in the market. I'm not going to pretend like there doesn't exist a universe where something different happens. I just think it's far more likely that we just simply have a bear market like we have every midterm year, you know? And if I'm proven wrong, then I'm proven wrong. I would say I'm probably around like 70 to 80% confident in my view that that is how this plays out. And so because of that, I ended up selling off that approximately that amount of my Bitcoin stack last year, right? Because I didn't want to sell off all of it in case the super cycle guys were right, but I wanted it to sort of reflect my thought process. Like, the odds of this being the cycle top seemed kind of high. And so I wanted my investment portfolio to reflect that. And the problem is that the problem with Bitcoin and over the last year or two is not necessarily its USD valuation, but it's going down a lot on other valuations, right? Like, its gold valuation is the same level that it was back in 2017. So you're talking about 9 years ago. I think that's the bigger thing. And so for me to really get confident again in Bitcoin, I'd like for a few more months to go by just to see that time-based capitulation component play out. Because I think you're right. I mean, I think there are a lot of people that don't believe it's a bear market. And I think ultimately people, in order for the bear market to be over, usually everyone has to give up. And once everyone gives up, then we bottom and then we go up. And last cycle, that ended up being the FTX capitulation. I don't know what it's going to be this cycle, but usually it takes more than a few months.
Many traders believe the Bitcoin cycle has changed forever, but the numbers suggest we may be repeating the same pattern again. Many traders keep arguing that the 4-year cycle in Bitcoin is dead, yet the historical timing still tells a different story when examined objectively. If you step back and measure previous cycles from market bottom to market top, the pattern has remained surprisingly consistent. One cycle lasted roughly 1,062 days, while the prior ones followed very similar durations, with the peak appearing within about a week of the expected window. That level of consistency suggests the market may not be as unpredictable as many claim during periods of volatility. When you extend the same timeline logic forward, the implication is that the next major low is more likely to appear months later rather than immediately after a sharp correction. In practical terms, this means the current phase resembles a type of mid-cycle bear environment that has historically appeared in midterm years. During these periods, Bitcoin often underperforms against alternative benchmarks, such as gold, the broader equity market, or energy sectors. Looking at cross-asset valuations reinforces this idea. Bitcoin's valuation relative to gold, for example, has returned to levels seen nearly a decade ago. That kind of stagnation in relative performance usually signals a cooling phase rather than the start of a new bullish expansion. For investors watching the market closely, the key signal is not just price but sentiment exhaustion. Bear markets in crypto historically end only after widespread capitulation, when most participants finally abandon the expectation of an immediate recovery. Until that psychological reset occurs, markets often continue moving sideways or downward, setting the stage for the next long-term accumulation phase that eventually fuels the following bull cycle. So, is the 4-year Bitcoin cycle truly dead? Or are we just in the part of the cycle most investors misunderstand? Drop your thoughts in the comments. share this with your crypto friends, and subscribe for more deep dives into the crypto market. The speaker argues that despite claims that the cycle is dead, historical data shows that Bitcoin's previous market cycles have ended within a very similar time frame, roughly around 1,000 plus days from the market low. The last top even occurred within about a week of the timing of earlier cycles, suggesting the pattern may still be valid.
Yeah, I mean, so like last year, I sold off, a decent amount of the Bitcoin. Um, I was much more bullish on metals and some of the other sectors that tend to top last in a late business cycle environment are things like energy, right? So if you look at every prior midterm year, Bitcoin drops against gold, it drops against the S&P 500, it drops against the energy sector, right? So you look at Bitcoin's valuation against XLE and look at yearly candles. So this is the way I do it, right? Like I don't like I'm not necessarily an expert on energy stocks, but I can look at a chart and just be like, all right, like every midterm year, Bitcoin drops against energy. 2014, 2018, 2022, and here we are in 2026. So these patterns just repeat themselves. And so what I've said before is that in midterm years, as it relates to crypto, you're far better off just assuming it's a bear market and preserving your wealth, right? Trying to protect what you have so that by the end of the year, you can then make a long-term investment again in the asset class and then enjoy the next bull market. The problem is a lot of people just go all in at the top. And then they scream the entire way down that we're in a bull market, and then it just ends up being a bear market. So what I try to do is in midterm years, rather than just twiddle my thumbs and wait for the bull market to come back in crypto, I invest in I invest more heavily into other areas. And so that's what I do, right? And then I normally prepare before the midterm year arrives. Like I'll get more interested in those areas ahead of time so that then there's something I'm looking at in the midterm year. Because otherwise, midterm years are pretty boring if you're only following what Bitcoin is. I don't believe we're at the bottom of the cycle.
Because you think it can go on for a few more months this year through this midterm cycle.
Yeah, I mean, normally the bear markets last more than a few months. So, and again, like I think the U.S. I agree with you. I mean, I don't really think the U.S. devaluation is the fairest thing to look at. I mean, if you're looking at that and coming to conclusions and saying, well, it's the same spot that it was 5 years ago, then I would agree with you. But when you value Bitcoin in other things, right? Like if you value it against something, I think we can agree that fiat is going asymptotically to zero, right? Like we can agree on that.
Sure.
So the main thing I have is the opportunity cost, right? Like, and I've sat through 3 prior bear markets before this one, and the problem is that Bitcoin's just never been a great investment in bear market in midterm years. Like it's a good thing to buy at the end of the midterm year, but it's never been a great thing to buy, at the end of the post-halving year.
Right.
So when I value it against other things like the stock market, and when I value it against gold, think about it. When you value it against gold, it's where it was back in 2017, and I mean, at that point, it's kind of hard to just ignore that, like it's hard to just say, well, so what, it's still a higher low. I mean, you're talking about a decade where it's literally at the same valuation against gold. And a lot of Bitcoiners have mocked gold during that time, even though the returns over the last 9 years have been exactly the same. So I do think that there is data that would suggest that there's reason to have other things in a portfolio besides just Bitcoin, because what happens is people will go years outperforming lower risk assets like gold, but if you never sold any of it and never took profits on any of it, then you find yourself not even having outperformed gold.
Many investors believe Bitcoin is holding strong, but when you measure it against gold and other markets, a very different picture starts to emerge. If you evaluate Bitcoin strictly through its USD price, the market may appear stable, even resilient, but a deeper analytical lens forces you to examine Bitcoin relative to other assets, and that's where the narrative changes. When Bitcoin is valued against assets like gold or broader equity markets, the performance tells a more cautious story. For example, Bitcoin's valuation against gold has returned to levels last seen around 2017, effectively erasing nearly a decade of relative outperformance. That raises a critical concept many crypto investors overlook: opportunity cost. During midterm phases of the market cycle, Bitcoin has historically struggled to outperform other sectors, particularly lower-risk assets like metals or energy-related equities. In previous cycles, the asset often remained stagnant for extended periods before the next major expansion began. That pattern suggests bear markets in crypto typically require time to fully develop rather than resolving within a few months. Historically, one technical signal that has consistently marked the end of Bitcoin bear markets is the recovery above the 50-week moving average. Each previous cycle showed a similar structure: prolonged consolidation, gradual recovery, and finally multiple weekly closes above that long-term trend line before the next bull phase began. Until that signal appears, the market environment often remains uncertain and range-bound. For investors observing the broader cycle structure, this phase becomes less about aggressive accumulation and more about managing exposure, while waiting for the technical confirmation that historically signals the beginning of Bitcoin's next sustained upward trend. When you step back and analyze Bitcoin through the lens of historical cycles and cross-asset performance, the bigger picture becomes clearer. Markets rarely move in straight lines, and crypto has repeatedly demonstrated long periods of consolidation before the next expansion phase begins. If you focus only on short-term price movements, it becomes easy to mistake temporary stability for the start of a new bull run. A more disciplined approach involves watching broader signals, such as relative valuations, investor sentiment, and long-term technical indicators like the 50-week moving average. These factors have historically marked the transition from prolonged weakness into renewed momentum. Until those confirmations appear, the market often remains at a stage where patience matters more than aggressive positioning. In this phase, the focus shifts toward protecting capital and observing how the cycle develops. Once the market structure strengthens and key indicators turn positive, that's typically when Bitcoin begins building the foundation for its next major upward trend. So, where do you think Bitcoin is in its cycle right now? Share your thought in the comments, share this with other crypto investors, and subscribe for more deep crypto market analysis. Do you think Bitcoin has already hit the bottom of this cycle, or is there more consolidation ahead before the next bull run?